How much you could save in capital gains taxes if Trump can get this bill through Congress, which is a big deal. So let's dive into this. So check this out here. We're going to use Diane Sample again. Diane Sample. All right, she's our go-to person. So Realtor.com as of July right here. Marjorie Taylor Greene shares plans to eliminate the home equity tax, a gift to the American people. Interesting. They got this nice little chart that says 62.2% of Californians are over the exclusion limit. Then again, in my state of Georgia, 31% are over the exclusion limit. Look at Massachusetts. That's a significant amount, as you can see there. Florida, almost 50% are over the exclusion limit. Now, I don't know if that includes, like, for instance, I'm way over the exclusion limit, but when you factor in what I put into the house, I might not be. I probably am a little bit. But anyway, that's a lot of people who are going to pay capital gain tax on their homes, for sure. Roughly 1 in 3 homeowners in America has built up more equity than the federal capital gain tax exclusive for single filers protects. This means nearly 29 million households could face a tax of up to 20% on the profit of their home sale, simply for staying put and watching their equity grow. On Thursday, Marjorie Taylor Greene introduced a No Tax on Home Sales Act, a bill that would eliminate the federal capital gain tax on the sale of a primary residence. 100%, man, 100%. And then she goes, look, I own a construction company, so I'm very familiar with the commercial and residential building market as well as real estate, and it's stagnant. That hands-on experience, coupled with her role as a parent to 3 adult children and as a daughter with aging parents, has shaped her view of the housing market's most persistent pain points. There's just a lot of problems in the real estate market right now, especially about homeowners who feel trapped by taxes and the equity they spent decades building. 100%. This out again, because we don't use tax. We've got to start adjusting the tax code for inflation. The federal capital gain exclusion was set in 1977 when the median U.S. home price was $145,000. Today, it's $360,000. And in Greene's district, property values have surged 230% since 2002. All right. If the exclusion had been indexed for inflation, it would now sit at $660,000 for individuals and $1.32 for couples. 100%, dude. Trump does support this, by the way, so we need to Trump to, look, man, if you're going to be dealing with all the stupid Epstein stuff, let's throw some good legislation out there to get the MAGA base reinvigorated, because right now the MAGA base is like, dude, what the hell? I find it always funny. The cost! Greene's proposal comes with an estimated $6 billion loss in federal revenue. Okay, that means $6 billion in gains for taxpayers. Do you not see now? You start to see a loss to the federal government is a gain to you. Interest to the federal government is a gain to you. Do you not see how this works? If it's a loss to the federal government, that means you are keeping more. That's a good thing, my friends. But the deficit, okay, so then pay all your money to the federal government and that will reduce the deficit. No one's going to do that because it's stupid. Anyway, so let's go back here. So we're going to look at Diane Sample. And again, the capital gain exclusion is still $250,000 for single people in Diane Single from what it was in 1997. It's insane. All right, so again, we got Diane Sample. I'm going to show you we got nothing here. We're just going to say her property is $1 million. She paid $250,000 for it in 2000. All right, so and now it's worth $1 million. All right, so she paid $250,000 for it in 25 years ago. We take our trusty calculator. We say 250 is our present value. $1 million is our future value. Let's go over here. Oops, hold on a second. Blink, blink, 1, enter. We go 25N, 0 payment. It's risen 5.7% a year. Now that might be on the high end, but that's not unreasonable in certain places. So 5.7% a year. All right. So now she's going to sell the house, and she's going to sell it next year. In 2026, she's going to sell it, and she's going to downsize. Where we got there? We're going to sell it and downsize, and we'll stay in New Jersey, whatever. And so she's going to sell it. Unless that's all right. We'll run with it. So she's going to sell it for $1 million, and she'll downsize for $300,000. All right. So she's going to buy a house. You can take the equity and buy a house for $300,000. Now she also has income of Social Security, which she's receiving right now. All right. That's it. So we're not looking at Monte Carlo or anything like that. We're just going to show you what the taxes do here. So we're going to hit cash flows, summary. And there's her house. Again, we're charging, well, not again, but we're charging a 5% sales transaction fee. So she's going to lose $50,000 to various realtors and stupid governments and stuff like that. Anyway, so she's going to walk away with $950,000 as her net proceeds. She's going to use $303,000, $300,000 plus a 3% inflation to buy a new home. But it doesn't matter that she's buying a new home. What matters is she's got that $950,000 of income, of which she's going to have to pay taxes on the gain, the $750,000. She'll pay $99,000 of gains, of taxes on the gain. $99,000. And this is very interesting. I want to point something out here. That year, her federal tax bracket is still only 22%. This doesn't happen very often. What's her effective tax rate? 15, and then the state tax of 5.6. Her effective tax rate is actually higher than her federal income tax because capital gain isn't considered income tax. It's called capital gain tax. If you look at the 1040, watch what happens in 2026. You'll see. Only income she has is Social Security. We can look at 2025 too. Only income she has is Social Security, so no taxes. But now, of that Social Security, 85% of that is now subject to taxation because she has this $450,000 capital gain. $450,000. Whoa. And she loses 72,000. Well, let's see right here. $72,000 to the feds, plus another $20,000 basically to the state of New Jersey. Whoa. Let's have her living in Georgia. But Josh, she's rich. She's not rich. Let's have her living in Georgia, and let's see what the taxes here are. Let's go to retirement cash flows. And we're talking thousands and thousands and thousands of dollars. Regular people can save. Here's her tax still $99,000. She still got to pay state tax, the capital gain to the state of Georgia. $72,000 to the feds on $450,000 capital gain. So if we take my trusty calculator, we say 72 divided by 450. I'm assuming it's 16% effective tax, a 16% effective tax right there, and then another to the state of Georgia in that regard. We need to get this through. It's a big flipping deal, dude. I mean, it's a big, just look at Realtor.com, what they say. How many people got friggin', look at that, Montana, 53% over the exclusion amount. This is a huge win if MTG can get this through. Anyway, pressure your freaking Congress people, my friends. But we can't afford to pay for it. Dude, I get so sick of that crap. That's our freaking money. It's not theirs. It's ours. Smash that like button. God bless.